What happens when a long vacant land finally sees a $60 million investment? Welcome to the Commercial Real Estate Insights Podcast. I'm your host, Steve Hamoen. Let's get right to it. A significant development is set to transform Washington Avenue as a $60 million multifamily project prepares to break ground on a site that has been vacant for years. This project is expected to breathe new life into the area, offering a fresh perspective on urban living and potentially boosting the local economy. The project will include a mix of residential units and amenities that cater to modern urban lifestyles. With the growing demand for multifamily housing, this development could serve as a catalyst for further investment in the region. It's a prime example of how strategic real estate development can revitalize underutilized spaces. While this project is taking shape in Washington Avenue, it's interesting to look at similar trends in Ontario's Kitchener-Waterloo and Cambridge areas. These regions have also seen a rise in multifamily developments as urbanization accelerates. The need for more housing options is pushing developers to innovate and adapt to changing demographics. In the United States, the project on Washington Avenue reflects a broader trend where developers are focusing on infill sites to meet housing demand. This approach not only maximizes land use, but also contributes to sustainable urban growth, something that is equally relevant in both Canadian and American contexts. A year after making a substantial investment in downtown Sacramento office properties, Ethan Conrad remains optimistic about their potential. His acquisition of the Renaissance Tower on K Street last fall was a notable move, reflecting his confidence in the area's commercial real estate market. Conrad's strategy seems to rely heavily on an anticipated upswing in office occupancy rates. Despite the challenges posed by remote work trends, he is betting on a resurgence in demand for office space as businesses reassess their needs and employees return to physical workplaces. This bullish outlook on office space is not isolated to Sacramento. In Ontario's Kitchener-Waterloo and Cambridge regions, similar trends are emerging. Developers are increasingly focusing on office spaces that cater to new hybrid working models, providing flexible and adaptable environments for businesses. As with Sacramento, the emphasis in these Canadian regions is on creating spaces that attract businesses back to physical offices. This includes incorporating modern amenities and fostering environments that support collaboration and innovation. Cross-border, the trend indicates a broader shift in how office spaces are perceived and utilized. Both in Canada and the United States, the evolution of office environments is a response to changing work dynamics and the ongoing need for in-person interaction and collaboration. In Milwaukee County's southern suburbs, 3 local developers are planning to introduce new multi-tenant retail buildings, marking a significant investment in the region's commercial real estate landscape. These projects are set to unfold in both Greenfield and Oak Creek, offering a mix of retail opportunities that could potentially revitalize these areas. In Greenfield, developer Assad Jaber, in collaboration with Milwaukee-based ETN Engineering, is proposing a 3,600 square foot, 3-tenant retail building at 4691 South 27th Street. The site, which was formerly a gas station and convenience store, has been abandoned and neglected over the years. The plan is to demolish the existing structure and replace it with a new retail building. However, during a recent Greenfield Plan Commission meeting, concerns were raised about possible traffic congestion at this busy intersection. The commission has requested revisions to the plans, and a review is scheduled for August. Additionally, Shema Qasim, also working with ETN Engineering, has plans for a 10,700 square foot retail building at 4663 South 51st Street in Greenfield. This development is expected to house up to 8 tenants, although the team has indicated that some spaces might be combined to accommodate larger businesses. The Plan Commission has yet to take action on this proposal, citing questions about the demand for small retail spaces given the current vacancies in the area. In Oak Creek, Meehan's Real Estate is behind a 6,000 square foot retail project at 7123 South Pennsylvania Avenue. This development will feature space for 3 tenants, including a 3,000 square foot convenience store with an associated gas station. 2 additional 1,500 square foot spaces will be available for lease, providing opportunities for smaller businesses to establish a presence in the area. Columbia Property Trust has listed 201 California Street for sale, following a default on a $1.7 billion loan. This move comes as the appraised value of the building has dropped by more than 60% from 2021 to 2025. The decision to sell reflects the broader challenges facing the San Francisco office market, where a wave of defaults has been looming. In San Francisco, the office market has been grappling with rising vacancies and declining property values. This trend is not unique to San Francisco. Similar issues have been observed in other major cities across North America. As companies continue to navigate the post-pandemic landscape, many are reevaluating their office space needs, which has contributed to the current situation. The decrease in office building values and the increase in loan defaults highlight the ongoing challenges within the commercial real estate sector. Despite the difficulties, there are opportunities for investors who are willing to navigate the complexities of the current market. The sale of 201 California Street could attract interest from buyers looking to capitalize on the potential for future growth. In Ontario, the office market has also experienced shifts, though not as severe as in some American cities. The Kitchener-Waterloo and Cambridge areas are seeing a focus on creating flexible office spaces that cater to hybrid work models. This adaptation is aimed at attracting businesses looking for innovative environments that support collaboration and in-person interaction. While the challenges in the office market are significant, they also present a chance for transformation and innovation. Both in Canada and the United States, developers and investors are exploring new ways to utilize office spaces, reflecting a broader shift in how these environments are perceived and used. In Chicago, a notable transformation is on the horizon as an industrial developer sets its sights on Ford City Mall, located on the city's southwest side. The developer plans to purchase the mall with an ambitious $150 million proposal to demolish the existing shopping center and reinvent the site as a large-scale warehouse complex. This redevelopment initiative underscores a growing trend in the commercial real estate sector, where underperforming retail spaces are being repurposed to meet the rising demand for industrial and logistics facilities. Such projects are becoming increasingly common as e-commerce continues to expand, necessitating more warehousing and distribution centers. The Ford City Mall project reflects a broader pattern seen across North America, including regions like Kitchener-Waterloo and Cambridge in Ontario, where developers are reimagining existing spaces to better serve current market needs. The shift towards industrial use not only revitalizes aging properties, but also aligns with changes in consumer behavior and supply chain logistics. As the landscape of commercial real estate evolves, these adaptive reuse projects highlight the importance of flexibility and innovation in development strategies. By transforming traditional retail sites into modern industrial hubs, developers can leverage existing infrastructure while catering to the demands of today's economy. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.